Hello, 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 and welcome back to the More Money Podcast. This is your host, Jessica Morehouse, and this is episode 312 of the show. I am thrilled to be back with the podcast, quite honestly. I always need a good little break over the, holidays, but it's really good to be back. And I have been on top of this podcast in terms of booking guests. I have guests booked out until mid-April already. And, it's only January 20th as of the day that I'm recording this intro. So I'm pretty proud of myself for getting and some really, really good guests. So I can't wait. And this was an interview that I actually recorded right before I went on holiday. And it is another Canadian financial educator who I actually discovered first on YouTube and then Instagram. And I wanted to have on the show because he comes at it from a very different perspective, probably because he's 10 years my junior, but also because he, is really into, kind of delving into maybe some areas that maybe I don't really delve into, such as like real estate investing and individual stock investing and cryptocurrency and just exploring, the whole interesting world that is personal finance. So I have Griffin Milks on the show. So if you're on YouTube, or especially like finance YouTube, you are probably already familiar with his channel. I think it has like over 80,000 subscribers. So he's doing his thing, and he really, really is. So I'm really excited to have him on the show. So in case you're not familiar though, he is a YouTuber, TikToker, Instagrammer, and he is only 25, and he is also a real estate investor and owns 15 houses, and he also flips houses as well. Gosh, I didn't have my life together at 25. My gosh. So he really is doing the thing. And now also he was able to, I talked about this in the episode, I believe, he was able to quit his job not too long ago and now just does this full time and is an entrepreneur, which is pretty cool. So he's on the show just to talk about, what he's doing, some of the advice that he gives to other young people, young Canadians and young investors, and just give you some motivation to get stuff done and moving, this January and for the rest of the year. So I know you're going to love this episode with Griffin. Just before I get to that interview with him, though, I do want to share just a few words about this podcast episode sponsor. This episode of the More Money Podcast is supported by Harvest ETFs. I talk a lot about ETFs on this podcast, but not all ETFs are created equal. Although in the late 90s, ETFs first started out as products that would track the movements of a broad market index like the S&P 500, now there are a plethora of active and niche ETFs to choose from. For example, if you want to ensure part of your investment portfolio is investing in clean energy companies, you may want to check out HCLN. That's Harvest's Clean Energy ETF. It invests in the 40 largest clean energy issuers from North America, Europe, and Asia. And if you're interested in future growth in the space economy, then ORBT, or Orbit, Harvest's Space Innovation Index ETF, can give you exposure to companies focused on space innovation, such as satellite owners and rocket launch technology companies. This is all to say that if you're looking for something outside of your regular index ETF, you've got options. A lot of them. And Harvest ETFs has a big selection to choose from. To learn more about Harvest ETFs, their ETF lineup, and even just to learn more about ETF investing in general, Harvest hosts their own Harvest Talks podcast. Visit harvestportfolios.com. Once again, that's harvestportfolios.com. Welcome, Griffin, to the More Money Podcast. I'm so excited to have you on the show.
Hey, thanks for having me, Jessica. Happy to be here.
Yeah, I'm so excited. I've been following you on social media and YouTube, especially as I have, tried my best at figuring out YouTube. And you're one of the first kind of people that I started, watching and really following because, especially trying to find specific Canadian content too, which is, I think, always helpful as a Canadian. So super excited to have you on the show. And you have a very interesting background and story and have achieved so much in such such a short amount of time, which is really exciting. So I kind of want to start, kind of at your origin story, so to speak. Tell me, let's kind of start, because I know part of your story is, you went to the University of Ottawa and studied commerce, and then you got like what most people would be like, oh, solid job, stay there forever, get that government pension. You worked at the government in Canada for several years, and then you made a big shift into, educating people about personal finance and now running your own business and doing this full time. Do you want to kind of share what got you interested in the world of investing in personal finance? I'm assuming maybe you were already interested in it because you maybe studied a little bit of that in university.
Yeah, absolutely. So that's exactly correct. I went to the University of Ottawa, studied business throughout my university degree. Like, I've always been someone interested in finance, like in general. Money's always something that's been of interest to me, pretty much just to like grow wealth and have options. At the end of the day, even when I was a teenager, I wanted certain things. So, well, you can only achieve that through sound financial practices and businesses and investing. So yeah, it's always been something really of interest to me. And then throughout my university career at the end, well, I kind of didn't really know what I was going to do. And living in Ottawa, it's a government town, essentially. Pretty much everyone works for the government, like a very high percentage. I think it's like something staggering, like 20 or 25% of a million people, which is a lot, Everyone in my family works for the government, and same with even like in my neighborhood, everyone on my street worked for the government. So long story short, I got a job. I got a job during my last year of university as a student, and then just transitioned right over. And like, it was great, as you said, stable job, great pension, great benefits, whatever. It just wasn't really my calling. I was 23 or 22, 23 at the time, and I had like a full-time job at the government, which just wasn't really super of interest to me. So being an entrepreneur, like, I always had businesses on the side. I'd work on them after work. And it got to a point where I just realized I've always been someone who's been interested in videography and then finance. So I just started sharing my investing journey, things I was doing, even with a very small account at the time. By account, I mean investment account. And it kind of just took off over time. And with consistency, after a couple of years, I finally decided to take that jump, which was extremely stressful at the time, for sure. And there was definitely like a year-long build-up towards that leap. But it was something that was just necessary for me, for my mental health and everything, and just where I was going with my vision, essentially. Yeah.
Wow. That's awesome. I mean, going through that transition myself, now this is like 5 years ago, I totally understand, especially when you mentioned the mental health aspect. It's like, if you're working at a job, you're like, I hate waking up every day going to work, and this just isn't the path totally for me. It's draining, and it messes up your mental health. And so making that decision for you, although difficult, and I'm sure, at least for me, I definitely experienced a lot of people questioning, like, what are you doing? That's crazy. Why would you leave such a great job? All that kind of stuff. And you having to be like, no, I don't quite know what I'm doing, but I know what I'm doing. In the long term, I think this will work out. Did you kind of feel like it was difficult making that transition? Because you are kind of, I guess on the other side of it, if you have that entrepreneurial spirit, that this is the right path for you.
Yeah, well, definitely there's always going to be that doubt in the back of your mind. But at the same time, first and foremost, I had a plan. Like, as much as I wanted to impulsively quit multiple times, I just made the rational decision of taking a step back and making a plan. So in that plan, there were a couple things. Number one, I wanted to make income that was at least somewhat close to what I was making, so that I'm just not taking this huge leap and then, okay, I'm going from one aspect of where I'm just don't like what I'm doing during my day to then I like what I'm doing, but I'm financially strapped and very stressed out in that aspect. So that's something I wanted to avoid. So making that income was the first thing. And then second of all, I really wanted to buy a house first, because I knew that, like, if I didn't buy a house, no one would touch me for years.
For a good 3 years, yeah.
Yeah, like at least. So that was something that I really wanted to accomplish as well before that. And then it took about a year for that to happen, of working pretty much full-time, 2 jobs, right? Full-time at work and then full-time after. And it was one of those things I just needed to make that decision if that's really something I wanted, that there was just no other way around it, and no one else is going to help you. It's going to do it for you.
it's such a smart thing that you give yourself so much time to plan, though that must be also hard mentally. You're like, oh man, I have like so many more months until I can, give my notice. But I think it's also really smart that you had, the thought process to be like, I need to buy a house before I leave my job, because it's as a self-employed person myself, it's not as easy getting a mortgage when you're self-employed or newly self-employed. So that's actually what I did too. I didn't actually plan it though. Awesome. I wasn't as smart as you. I didn't plan to quit my job. I just had a bit enough, and but I think I was subconsciously planning for it. Like I was squirreling away a bunch of money, and I'm like, I bet that's why. Mentally, I'm like, I need to get out of here. But I bought a house before I left. I'm so glad I did that.
Absolutely.
I want to kind of talk a little bit about that, because I know that's one of your passions of what you talk about on your channel, real estate investing, which is so fascinating. How did you get into that? Like that, to me, I am someone who's always been fascinated about it, but besides my principal residence, I've never delved into, being a landlord or anything like that. How did you really get started, or what kind of what was your starting point? I get so many questions like, how do you jump into that? And what was your experience like?
Yeah, so first of all, I'll break it down into a couple things. How did I start getting interested in it? Just literally through reading books. Like I read books all the time about business, investing, self-help. And then I kind of just discovered what real estate investing was all about. Really just fell in love with the concept. Like it blew my mind. People are buying you assets. Like what? Other people are paying down your loan and buying assets for you essentially. So you just need to put up a certain amount of money, that down payment, and then pretty much if you're buying a good property, we could go into that for hours, but that's, cash flowing and stuff. You're basically just having a cash flowing asset that's also paying down, and your net worth is going up every month regardless of your income. That's something that I fell in love with the concept. So then, just education on that. And then from there, I just decided, hey, I'm going to save up towards a down payment. So while I was still doing my stock investing, I saved up for a down payment and literally just jumped into it. Of course, you need to speak to like a mortgage broker, real estate broker about your goals and what you're looking to purchase. But back in, what are we now? We're almost 2022. I guess it was mid 2020. Which seems like not that long ago.
It really wasn't.
Done so many things.
That was like, then, beginning of the pandemic. Wow. Yeah.
Yeah. It must have been end of 2019 then. Yeah. Okay. That seems, that seems a bit more reasonable. Yeah. Actually, it was in November or October, November 2019. That was a duplex. Bought it for like $180K, which is unheard of now. Like that makes
Where is that insane. Duplex? That is
just
unheard
in my
of.
hometown of Gatineau, which is right beside Ottawa.
Yeah.
So that doesn't exist anymore, really. But since the market's just gone up so much, but from there, the beauty about real estate investing is it's just this. If you're strategically buying places that you can like renovate, and that's what I talk about a lot on my channel is buying places where you can renovate aesthetically, raise the rents, raise the market value, and then basically just re-leverage those properties. It's really like that domino effect, and that's something that now after about 2 years, there's just a lot of momentum going where refinancing one place, purchasing a new one, re-leveraging, and it's just, it really starts taking off after a little while. So
Did you have skills? Because I have zero skills when it comes to any kind of home renovations. Like, did you have those skills? Like, how did you get those? Like, how do you know? Because I remember seeing some photos on your Instagram, like, damn, like you like redid your kitchen. Like, that looks great. I have no idea how to do that.
No, it's funny. Not at all. Have you read the book Cash Flow Quadrant by...
I haven't. I think I've heard of it, but I haven't.
It's by Robert Kiyosaki, the guy who did Rich Dad, Poor Dad. Anyways, he goes into it and basically categorizes people into 4 different categories, like employee, self-employed, investor, business owner. I'm very self-employed mindset. I have a hard time delegating a lot of tasks in my business. And so when it came to renovating, I looked at my property and I was like, okay, I can either spend probably over $100K to do everything with a general, or I'm just going to pick up the hammer and it's going to take a while, but I'm in my early 20s. I can afford to take that time and just increase the property's value. So no, to answer your question, I just learned everything off of YouTube, essentially.
Some
things, all the tiling I got done by others, but other than that, I pretty much did everything myself and with a couple buddies really awesome friends who helped me out. So
that's amazing. I don't know if I could do that. I can't even paint a wall without getting, paint on the trim. So I don't know if I'm a lost cause or whatever, but that's amazing.
Yeah.
That's really amazing that you're just like, I don't know how to do this, but I'll figure it out. And also like, wow, what a great time for you to like get into real estate investing. I'm sure you've really seen the fruits of your labor over the past couple of years.
Oh yeah, it's unreal. Just in the past year, definitely there was some luck involved, but at the same time, I am really just of the mindset that if you're purchasing properties or investments, other investment classes with that longer term mindset anyways, and strategy in place, that your deal on your property might not be as attractive right now as a year and a half ago, but you can still find really attractive returns in the market right now. Like literally, I'm under contract to buy 2 properties. So, and have just purchased another one last week, or not last week, 3 weeks ago, so there are still deals to be had. Maybe just people who read headlines, oh my gosh, it's so negative all the time. But no, if you actually put in the work, you can find opportunities in any market environment.
Yeah. And I think especially to that long-term mindset, because so many, like you kind of mentioned, so many people are just like, oh, there's impossible to buy anything. It's like, well, you're going to feel like that with any kind of investment if it's a short-term mindset. But if you think about it in the long term, like anything is going to go up in value over time if you kind of stick with it. I think that's amazing and really inspiring too for, people that are your age who feel totally priced out of the market, that feel like that's absolutely impossible. But I'd assume a big kind of part of that is really, buying in the right type of market. Like maybe, a city like Toronto where like places are just like bonkers, maybe it doesn't make sense. And it sounds like you've kind of really focused on a couple different markets that made the most sense, like Gatineau.
Yeah, exactly. So there's different, markets are categorized into like primary, secondary, tertiary markets. And so if you're in a primary market like Vancouver or Toronto, like who am I to say pick up your stuff and move? But at the same time, depending on your situation, if you are able to do that, especially with work from home and stuff, I know people who literally picked up and moved to like the boonies and work from a cottage most of the time if they can. Of course that's not applicable to everyone, but if you are able to do that, maybe biting the bullet for a couple of years while you're in your earlier 20s or even 30s, it really doesn't matter, and try to do that to build up some equity and gain some momentum in your finances, it might be worth it.
Now, you mentioned that you own a bunch of properties. What is your, I guess, kind of strategy or goal? Do you have a set number that you'd like to own, or is it just, if you see a property that makes sense, you'll buy it? And are you like the landlord? Do you do all the work and the handyman stuff, or do you kind of outsource that?
Yeah, so we have a couple properties at this point, and I've kind of, at the beginning I used to do everything kind of myself, like in terms of the property management, and decided at least 6 months ago to just outsource that to a property manager, and that was the best decision ever. Just from gaining back that time and just minute little things that are highly time consuming but extremely low return on your invested time. So yeah, property manager isn't necessarily something I'd recommend right at the beginning, because let's say you were to buy a rental property, it's still good to get a little bit of experience about, speaking with tenants, knowing what's going on, maybe not swinging the hammer, but doing something like that, right? And then as your business grows, it just becomes completely unrealistic to have 10, 15 tenants that you're dealing with, collecting payments.
Yeah, that's a full-time job in and of itself,
That is why people have a full-time business doing that. So outsource that. And then what was the other question, actually?
I have no idea. Oh, no.
Okay.
I'm like, I don't know. I'm just so interested in what you're saying. Oh, yeah, the goal. Because it's like, I hear lots of people are like, I want to get this many houses by this age. Do you have anything like that?
So kind of used to, and yes, I think it's really important to set goals in every aspect of your life. And so for the real estate portfolio, definitely there are some goals. Like over time, for sure, I want to have dozens of rental properties. However, right now, and this is really personal to my situation, real estate is a capital game. So not having enough capital to throw into new properties is usually the biggest roadblock people face. So unless I was to go out and start raising capital from a lot of like friends and family, I only have a certain amount of capital to work with. And so earlier we were talking about the domino effect. Right now, what I've been able to do is accomplish on certain properties a couple 100% return on some properties, and that's like insane. That's stellar returns. So instead of just locking up, at first I was kind of just at this longer term buy and hold strategy. Now I've kind of, with the market having topped, I've sold off a couple to take that money and just put it somewhere else where I feel I can make those same types of returns, instead of just leaving them in a property making 30-40%, which is still fantastic, but just from an opportunity cost standpoint, decided to sell a couple and put that money into other properties for projects where I can really increase the value of the property and do it over and over again.
That's awesome.
Kind of a long answer, but
no, yeah, that makes a lot of sense. So it sounds like, it's not, I think some people think, because you see on social media, people are like passive income. And I'm like, most of the time, passive income is not 100% passive. It sounds like a lot of work owning real estate, even if you outsource. But it sounds like another key thing to being strategic with real estate investing is taking a look at your kind of portfolio and saying, do we need to sell some things? Because it doesn't really make sense to hang on. It makes sense to kind of put that money elsewhere. So you're always kind of taking a look and reassessing things.
All the time, for sure.
Yeah.
Just like a stock portfolio, every couple of months you need to reassess what's going on, where you're going, considering the market environment, considering the value of your assets, your capital on hand. All of that.
Mm-hmm. Yeah.
Exactly. So do you have any
mentioned,
plans though of investing in real estate, or not really?
I don't know. We literally just sold our townhouse, which was the first place that we ever bought, and bought a house in Toronto, which was a big investment. So we're gonna, I'd say give it a year to get comfortable with the new cost. This is the first house we've ever owned, and so I know there's going to be new expenses that we've never experienced, like working in or living in a condo that had maintenance that was done for us. So I'm gonna I don't know, I would love your advice, but I think it's always a good idea to give it a year, 4 seasons, to see what you need to be aware of, and then maybe we'll take a look at things after that. I've been talking about getting into real estate investing for a decade, but for some reason it could just be my own insecurities, and I'm scared of it. There seems like there's downsides. So I don't know, what if you can speak to some of the downsides, possible things to be aware of if you're thinking about getting into something like this?
Yeah, for sure. Like any investment, there's going to be downsides. However, the way I approach property investing, and it's really going to depend on the market. Like you said, in Toronto, I'm really not familiar with it. However, how much does an average duplex go for? At least $700-800K, right? I'm assuming something like that.
Duplex?
Maybe more.
So two semi-detached houses? Oh gosh, I don't know.
So probably at least $1 million, I'm assuming.
Over $1 million. To give you a point of reference, I think the average detached house is going for 1.2 to 1.4. So a duplex would probably be more. Insane. Yeah, it's stupid. It's stupid. So if we were to do real estate investing, I don't think it would be another place in Toronto.
Yeah, probably not. I mean, it really depends though, right? Because I don't know what the ratio of rent to the actual property value is, and that's really what comes into play to make it a good investment. But just off the top of my head, all of the property investments I've made have been stellar returns in terms of when you're comparing that to the stock market. And the reason being is because when you're investing in real estate, you're taking advantage of the tenants paying down your debt and building equity, hopefully cash flows if you purchased a property that makes sense, so that it can, first of all, cover any unexpected expenses that come up, but then also put that money in your pocket each month. And then also, if you're purchasing a property that has sort of that, it's under market value from a standpoint of the rents are kind of maybe not the best, you need some aesthetic, some cosmetic repairs, you're able to force appreciate the property. I know I'm making that sound really simple. It's not that simple.
Yeah.
So definitely you need to educate a lot on it and consult with a real estate broker. But that literally is what I have done. And every time I talk about this with people, it sounds very simple. It takes time.
Yeah.
But that's pretty much what I've done. That's just what I've done, right? People are quick to say, oh, that's not going to work in my market or whatnot. We'll figure it out.
And I guess a lot of it, Yeah, and a lot of it probably comes down to like having that personal experience. Like everything is scary until you try it out yourself. And yeah, you need to jump in. And then especially for you as well, it's like you've been able to replicate what you've done, over and over. And so that just confirms like, okay, the strategy works. So yeah, so we'll see. We'll see what the future holds. I definitely will ask you for some recommendations on some books, that for sure, and continue watching your YouTube channel.
What I would say though, for anyone watching, is to not get caught up with the frenzy of overbidding on a property, especially a rental property that doesn't make sense on paper just because you want to make a deal go through. For every, at least, I'd say I probably only go through on 10% of the properties I put bids on, because when I'm analyzing a property, I know exactly what type of return I want for the time it's going to take for a real estate investment, because it takes more time for sure than stock market investing, which is significantly more passive. So if I'm going to take my time to make to purchase a new property, it needs to be worth it. Like at least more than 20% return on investment in the first year minimum. So with that in mind, though, I'm able to know exactly what my bid is going to be on a property based on analyzing the income, the expenses, and look at all of that ahead of time. So yeah, not getting caught up emotionally with bidding wars and overpaying if it doesn't make sense, because that is a recipe for disaster for sure.
Yes. Yeah. Yeah, I mean, that's great advice for even if you're just looking for a principal property.
Definitely.
It is very easy.
Principal property, it's just you. And, people get a lot more emotionally tied up with a primary residence, which is still not the best thing to do, but it's not as bad as a rental property.
Yeah. You've got to put your business mind, set on when you're real estate investing, because it's like, you're not going to live in this. This is a business investment. I want to talk a little bit more, since you do also talk about, stock market investing and different ways you can invest your money to diversify your portfolio on your YouTube channel. So what is your kind of personal investing philosophy? How do you build your portfolio? How do you choose stocks or choose just what to invest in for yourself?
For sure. So I always recommend on my YouTube channel, when I talk about different stocks and ETFs all the time. By the way, for anyone watching who doesn't know what an ETF is, it's an exchange trade fund, but I'm sure you know what that is if you follow Jessica. But so I always recommend really thinking about your own personal situation before purchasing any stock or any ETF, because there are thousands of individual stocks and individual ETFs that do a whole bunch of different things and have different goals. So if you're just blindly purchasing anything that people talk about on the internet, chances are it's not really going to suit your goals. So going back to myself, then I identify, okay, well, I'm in my early 20s. I have a higher risk tolerance, longer term investments. First of all, I always recommend investing for at least minimum 10 years, like for real minimum 10 years. And the issue with that is I can say that as much as I want, right? But the reality is that I don't remember this statistic, but the amount of retail investors who came into the market in March of 2020 and since then versus before is staggering. I think it's more than like 50%. So most people don't have that much experience. And when you say 10 years, it's very hard for humans to project out 10 years. And actually, you can on paper say, okay, 10 years, yeah, cool, I'm in it for 10 years. And as soon as market correction comes or whatever, it's frenzy, panic, whatever. So longer term investment for sure. And then I look at myself, early 20s, at least I'm going to be investing for 20, 30 years. So therefore I can have a higher risk tolerance. I really like to purchase and have a higher allocation towards equities, so actual companies over like fixed income instruments like bonds, bond ETFs, preferred shares, stuff like that. So how do I pick them though? I always recommend first and foremost just going with an S&P 500 ETF. It's just the easiest one. I also really like NASDAQ 100 ETFs because these are really passive, low-cost funds that expose you to hundreds of literally the best stocks in the best market in the world. And that sounds really boring and simple, but it's because it is.
I'm all about the boring and simple investing. I love that.
Exactly, yeah. If I look at my stock market portfolio, of course I have a bunch of individual stocks, Shopify, a bunch of them that have 2, 3, 4 times, X in return. But when I look at even my, let's say, VFV, which is S&P 500, it's up over 150% for doing literally absolutely nothing, zero research, zero stress, just investing in it every single month, all the time. So over the past 5-6 years, which is fantastic. So.
Yeah. So what would you say?
Didn't really answer the question.
No, you did. I think I kind of get a sense. It sounds like, everyone's different. For you, you've got a big focus on equities. Do you invest in index funds, or are you more focused on building your own portfolio just from individual stocks?
Oh, no, I invest in index funds all the time, for sure.
Right,
like 50% of my portfolio is index funds.
Okay, awesome. Because I get when you mentioned there's so many more investors that started investing, especially since March 2020. And I think it's because there's so many, I feel like a lot of young people are starting to invest. There's more information online for free about this. And so they want to get in. I can't imagine you probably got so many comments and DMs about that during that time. I certainly did. Where should I invest in? You need to chill. This is not the time to just jump in and buy whatever. You need to take some time, be cool, calm, collected, and make a plan. And also now there's lots of apps that will let you trade with no commissions, which makes it very more accessible. My biggest issue with that is I've talked to so many people being like, I opened an account and bought a bunch of stuff, but I have no idea what I'm doing. And I'm like, well, that is real money that you've spent, right? You need to have a plan and a strategy. But like you said, it's so important to gather the information, but then really make a plan that's based on you and not someone else. And that's kind of one thing. I know you've had some videos kind of reviewing. There's a bunch of people that give information on TikTok, and we're kind of giving your reviews on that, which I always find so interesting. That video did
so poorly.
Oh,
just
I
as
liked
a side
it.
note. But just from a performance views, it was.
That's too bad. I liked it.
I had a good time doing it though. Yeah, it was fun.
And I'm sure a lot of work to actually put it together too, which is frustrating.
Yeah.
But what is your kind of sense? Because you've been doing this for a number of years now, and also creating YouTube videos, as I know, because I am nowhere near on the caliber as you. But it is a freaking lot of work putting these videos together. But then there's people online on Instagram and TikTok making these really quick videos, giving what seems like honestly advice and encouraging people to do a certain thing. What are your kind of thoughts on that? What are some kind of things that you want people to be aware of? Because I feel like that is where I see a lot of people making mistakes, not doing their own research and due diligence, just taking some stock pick from somebody on TikTok and buying it.
Yeah, for sure. So let's take a look at my business, for example, which is my YouTube channel. The reality is that who are people watching my videos? There are people who are interested in investing and are interested in keeping up with the markets and hearing what I have to say. So of course, I will talk about stocks that I'm looking at that I think are interesting. But I think where a lot of people go wrong is that they will just, and actually I know this for a fact because people will go and comment just the stocks I'm talking about in a video and it gets a bunch of up likes. That's a problem because I will not necessarily be recommending purchasing XYZ stock. Rather, I'm looking over it, talking about the pros, talking about the cons. So that is why for me, bottom line, a 10-second video on TikTok talking about stocks, you just won't get the full picture, end of story. That's why for me, my videos are always very researched, very scripted actually. I always write scripts because the way I look at it as someone who studied business and finance at school and stuff is you cannot make a thesis on a company in 3 seconds. Also, I'm sharing information about a company and my whole business is sharing information about investments. So I want it to be researched, planned out, and actually make sense before I pick up the mic and start recording a video. So that is why I kind of have gone towards the long format. But yeah, it's crazy how in this day and age, people's attention span, they just want a 2-second invest in this. But that's really not how you will get wealthy over time. It's just not. You need to do more research and you need to understand what you're investing in to get the full picture. Yeah. And if you really aren't interested in picking stocks and keeping up to date with the market, literally just invest in index funds and you'll make great returns over time. I was looking just recently, the NASDAQ 100 over the past 10 years has averaged 25% per year.
Wow. That's significant. That's really huge.
No, that is massive. 25% per year compounded for 10 years. That is monumental. I don't think people understand how powerful 25% a year compounded for 10 years is. It's really it's
Do you think
massive.
part of the issue is that people, especially with also the popularity of cryptocurrency and people talking about their big gains, people just can't really, and you kind of already shared this, people just can't think that far into the future. They want that quick gain because people online are talking about, people online are talking about their quick gains and stuff like that. Do you think that's kind of part of the issue too? Like we're getting more, I feel like because of social media, into this mode of the get rich quick again. Whereas I feel like there was a good period when I started blogging where everyone was just talking about boring index funds, and now it's all about the quick get rich, meme stocks and crypto and stuff like that.
Yeah, I think having exposure to cryptocurrency definitely has its place in a portfolio, but the issue is things like meme coins and here's the thing, you can make a lot of money with it. However, the percentage of people who are making a bag on a trade for a meme coin is like 0.001 compared to everyone else who's losing money, and no one's talking about losing money on the internet, right?
Yes.
That's the problem. So look, as humans, it's easy to fall victim. I'll see someone online saying, "Oh my God, I made 100K on a trade." Of course, your instinct is like, "Oh my gosh, that's what am I doing here?" Right? But at the end of the day, it's okay, in my opinion, to maybe do those YOLO gambles on 2-3% of your cash, 2, 3, 4. But anything more than that, it's just really unwise, in my opinion. That said, I have been doing a lot more research into cryptocurrencies like Bitcoin, Ethereum, some of these other smart contract tokens. And I do think they have, and we won't really dive into it in this video, but I do think they have some utility in a portfolio longer term, but you have to really understand that this is highly volatile.
It is.
So it's not something you can rely on and project out compounded returns. It's really something you need to just put money that you're willing to see. I'm not going to say willing to lose, but willing to see fluctuate greatly over time.
And I think that's the other thing that's not talked about is like the volatility of these types of investments. A lot of people are just thinking about the future outcome, but not like the emotions and, psychological pain that you're dealing with, seeing it up and down. And for me, it's like I have literally a tiny little baby bit of Bitcoin that I literally just bought to make a video about how to do it. But otherwise, I don't know. I think I'm good, for now, just because I also understand my own risk tolerance. And whenever I log in to see how's it doing, it just it just hurts. Or whenever I see it trending on Twitter, I'm like, oh my gosh, what now? And so it's like, okay, we know where I'm at. But I think a lot of people don't realize that. Again, they get into it and then they freak out and then they sell at a loss. And that's, a lot of people, like you mentioned, are not talking about the other side of it. You can lose money. You've got to really be strategic. And if you're going to do something like that, have a specific amount of money you're going to use and understand the risks involved with that.
Definitely. And I would even recommend, just if you are interested in that space, I'm not going to talk about meme coins or any of these smaller cap coins, but the big ones, if you are interested in that, really just allocating a small amount each, maybe 2 weeks or month, and really looking at this as a longer term store of value. I don't necessarily think it's going to be used as actual currency. I kind of don't really see it going that way. I see it more of being a store of wealth just based on limited supply. We could go into it for a long time, but that's kind of how I just see it. And I'm looking at just holding it for a while. I actually had Kevin O'Leary on my channel a couple weeks back, and he is just so bullish on crypto long term with the regulation coming through. So I think that's also going to be one really big component where, with proper regulation, it'll be something that's just more accessible to people and probably less volatile over time.
Yeah, but, I'd love to see it less volatile over time because it is crazy.
Yeah, for sure. I've actually been mining Ethereum for about 4 years.
I have no idea how that works.
Oh, okay.
I've always been curious, but I'm cannot physically, visually understand. So what do you want? Sure. Do you want to share what does that mean?
In a nutshell, it's basically using a computer to solve equations to create new blocks on the blockchain.
Wow.
That is rewarded with tokens, like Ether tokens in this case.
Do you have to be good at math? How do you figure out?
Oh, not at all. No. You just hook it up to a program. You just buy a pretty powerful computer, I guess we could say, kind of like that, and you hook it up to a program, and it just it just solves these equations in a pool with other people, and then you're rewarded in coin. That's a really simple way of doing of explaining it, but that's kind of what it is. Yeah.
Wow, that is incredible. Yeah, I don't think I'll ever be doing that, even if like you make everything sound so simple, which I appreciate. But I'm like, I don't know about that.
That's what I try to do with my YouTube channel, is make these concepts, well, not seem, but just more simple to understand.
Yeah, breaking it down so it's understandable. Because I think one of the issues for me when I first started investing in my early 20s was I found it very complex and hard to really get in. Thankfully, a lot has changed over the past decade. Like just accessibility. Like before, it's like if you want to invest, it's like it was very difficult to even open up a discount brokerage account without $10,000 to start.
100%. And when I started, like years back, when I turned 18, I was able to have a brokerage account myself. I remember opening an account. It was crazy. Like they literally mailed me a big stack of documents. I had to send it or fill it out, send it back. It was a super long process. I think it's a blessing and a curse, this whole fact that you can create a brokerage account. I definitely think there's significantly more benefits that you're able to just open an account quickly. Everyone has it's accessible to everyone. But yeah, you need to do more research and just understand what you're investing in. That's just what I would say to that.
Yeah. No, I definitely think there's more positives than negatives overall. And especially, honestly, I think the biggest benefit is having more education and information readily available, because there really wasn't that much back in the day. And so this is really exciting and empowering for people. So before I let you go, I'm very curious, first off, like what do you have kind of a 5-year or a 10-year plan? I know you are very into goal setting, which I think is great. Do you have kind of a vision for what you want, where you want to be in the near future?
Yeah, definitely. I usually don't project out like 5 years though. It's usually just 1 year. So I've actually just gone through an exercise of doing my goals for 2022.
Nice.
Which is, haven't even finished 2021. What am I doing here? But I'm just being, I'm doing that in advance. What are my plans? I'm kind of just going with the flow right now. Well, not really, but I'm very bullish on my YouTube channel. I just want to continue doing that, investing in property, continue scaling out that business and sharing it with everyone who wants to tune in and be entertained, hopefully, but then also learn from it and share their investing knowledge as well. And in the comments, I always enjoy responding to people and chatting with people who are interested in finance, because I can talk about it forever.
That's awesome. Yeah, actually, that's kind of what I do. I try not to, and I think that's actually a great strategy now, being someone in my mid-30s, because where I'm at right now was not anywhere where I thought I would be at 25. And I think it's actually kind of great to have those goals, but maybe have a shorter kind of time horizon, like 1 year, because then you are more open to opportunities that you wouldn't know would be even available to you, right? So it kind of leaves you open to what could possibly happen.
Exactly. Like 5 years ago, I hadn't even started my government job. So how could I have ever projected out any of this?
So much can happen in 5 years or 10 years or, it's crazy. So I'm really excited to kind of see where your journey continues, and I'll continue watching you, of course. So I know you have, your YouTube channel, which is under your name, Griffin Milks, but you have some other things on your website, some other products like courses and stuff. You want to kind of share some information about that?
Oh, sure. Yeah. So anyone who does want to follow me, it's pretty much just Griffin Milks. I mainly just use YouTube and Instagram. Those are my two go-tos. I've tried doing TikToks. I can't stay consistent with it, but
I've tried it when there was the big push for like in the summer of 2020, and everyone started getting on it because we're all just locked in at home. And not for me. I couldn't figure it out. It just wasn't my vibe.
Well,
I don't know.
There you go, and that's fair. Yeah. I think it's just very time consuming. That's the thing.
Yeah,
like it'll take me an hour to do a TikTok, and I'm just like, what? It took an hour? I don't want to say.
I know, and people are like, "Oh, it takes me 5 minutes." You're like, okay. Like I've been doing Instagram Reels, which is basically the same thing, but I feel like the people on Instagram are nicer than on TikTok.
Really? Yeah, people on TikTok can be pretty
brutal.
Let's put it that way.
Yeah.
But anyways. So I do have a course I developed last year. Really. And by course, I'm really not trying to, it sounds guru, whatever. That's really not my goal here. My goal is I want people to go through this course. And if you don't understand how to invest in the stock market, I want you to be able to take this course, understand everything you need to know to properly navigate the markets, know what you're looking at, how to analyze stocks, all the quote unquote stuff that is more boring and dry to see on YouTube, but then actually get that in a fun, entertaining manner through my course, and then be able to craft a portfolio that is suitable for like your profile, your investor profile, back to what we were talking about earlier, where what I invest in is not going to be the same at all as what like my dad invests in.
Or what I invest in, maybe, you know?
There you go. Same thing, exactly. So really self-reflecting and tailoring a portfolio that's going to be suitable for your needs. That's really the goal of that course. So that's on griffinmilkscourses.com where you can find that.
Awesome. And of course, people can just find you at Griffin Milks on social media, on Instagram.
Yeah, exactly. And sneak peek, I haven't really talked about this, but in the new year, I'm going to be doing a real estate investing course with 2 other awesome Canadian creators.
I was just going to say, I'm like, you should, or I was going to ask if you had one. And if not, you should, because I would definitely take it because I'm very curious.
No, definitely.
I think that's a great idea.
Yeah, because real estate is one of those things, it's just really hard to understand and grasp. And where I've felt the most value is someone who has actually done it, so has experience and is able to share just experience with various different elements of running a real estate business from the beginning to managing tenants, right? Like you can only learn so much from a book when it comes to real estate investing, because it's a lot more hands-on than other forms of investing. So working on that. Cool. Hopefully it'll be out in March. But
ooh, okay. No set date, but let's just say 2022.
Exactly, 2022.
Awesome. Well, thank you so much for taking the time to be on the podcast. It was a pleasure having you on, and I'll continue to watch, and I encourage everyone to follow you. But thanks again for coming on the show. It was a pleasure having you. Yeah,
it was awesome. Thanks for having me, and maybe in the future we can do it again.
Yeah, awesome. Yeah. And that was episode 312 with Griffin Milks. You can check him out on his YouTube channel, just youtube.com/Griffin Milks. How do you get one of those URLs? I feel like mine is a weird one. It's like youtube.com/C/Jessica Morehouse 1. I don't think I did it right. Anyways, that is where you can find him. You can, of course, also find information about his courses, because he mentioned he has a few courses. One that is about mastering the stock market. He also has a spreadsheet if you're looking to kind of improve your personal finance situation. He's got an awesome spreadsheet. And he also has kind of a mini investing course that you may want to kind of dive into, and it's totally free. So you can go to griffinmilkscourses.com to find all of that information. And of course, don't forget to follow him on Instagram at Griffin Milks. I will include all this information in the podcast show notes for this episode, so make sure to go to jessicamorehouse.com/312 to find out all of that information. So I've got lots of great things to share with you, so do not go away, including a special webinar I'm doing in just a few short weeks. So stick around for that information. You're not going to want to miss that. But before I kind of share all of that good stuff, well, gotta share some great words about this podcast's episode sponsor. This episode of the More Money Podcast is supported by Harvest ETFs. Looking to add some sustainability or growth equities to your portfolio, but still want to be a long-term index investor like myself? Well, that's why I've got index funds in my core portfolio and a satellite portfolio to explore other types of securities that are non-index based. Now, some investors like to use their satellite portfolio to pick stocks, but you can also use it to invest in specific ETFs for potential higher returns without having to sacrifice diversification. For example, I know a lot of us have watched traditional sports, video games, esports, and iGaming converging into a new universe of digital entertainment. The GameStop story has encapsulated that trend, and GME itself is part of HSPN, Harvest's sports and entertainment ETF that is designed to capture the massive potential for growth in the rise of digital sports and entertainment. Or maybe you want to invest in the blockchain technologies powering cryptocurrencies, NFTs, and the cutting edge of digital security. Instead of picking a handful of companies to invest in, you could buy HBLK, Harvest's blockchain technologies ETF, which holds almost 50 different companies inside it. This is all to say that if you're looking for something outside of your regular index ETF, you've got options. A lot of them. And Harvest ETFs has a big selection to choose from. To learn more about Harvest ETFs, their ETF lineup, and even even just to learn more about ETF investing in general, Harvest hosts their own Harvest Talks podcast. Visit harvestportfolios.com. Once again, that's harvestportfolios.com. Okay, so let's get to the good stuff. But actually, before I share details about the webinar, I do want to remind you, in case you forgot or missed it in last week's episode with Erica Lini, I'm giving away books. As always, every season of the podcast, I do a big book giveaway of any book that is featured on the show, or whenever there's a guest that has a book available, I'm giving it away. And honestly, I don't think y'all realize this, but I write kind of personal note cards that go with them. I mail them personally. I go to the post office myself. I buy these books so I can support these authors. And then I write a little nice little note for the winner, and then I mail it myself. It is personal. It really is. So anyways, if you go to jessicamorehouse.com/contest, or just go to the show notes for this episode, jessicamorehouse.com/312, you can find information about how to enter. So currently I'm giving away Erica Lini's Money Like You Mean It book, but I will always be updating that landing page with new books that will be featured. Whenever there's a guest on the show, I'll plop a new book on there. Ooh, I don't like the word plop, but plop. That's the only word I can think of at that moment. So we're going to keep that in. Anyways, make sure to go to jessicamorehouse.com. And then basically at the end of the season, so this is looking like I'm going to end this season around early June. That's when I kind of, draw the winner. So if you enter now and you win, it'll be a very big surprise, because you're going to forget that you ever entered that podcast. Okay, so that is that. What else to remind you? Okay, so let's get to the good stuff about the webinar. I literally just came up with the idea last week while I was writing out my, kind of first email newsletter for my email subscribers. Also, if you're not on my email list, make sure to get on there. If you go to jessicamorehouse.com/subscribe, or just go to my website, it'll be right there. So get on there, because I always share lots of cool things on there. But anyways, I decided, it's been a very long time since I just did a webinar for me, for just for my audience, basically. Honestly, I can't remember the last time. It may have been last spring. So I'm going to do one on Wednesday, February 2nd at 7 p.m. Eastern time. And it is all about goal setting. So setting your financial goals for the year, and then breaking them down into, actionable steps, figuring out how to stay motivated, and just make sure you're basically setting the wheels in motion to thrive and not just survive in 2022, because we're still in this weird, not totally normal world. So let's, just do the best we can and, kill this year. And so the kind of title I gave the webinar is 2022, Your Thriving Year. That is kind of I feel like I don't know what the term is. Is that like a manifesting thing where it's I'm going to manifest that this is my thriving year? I'm doing it. So I want to, share some tips with you so you can also set that intention for yourself and have a really good rest of the year. So make sure to join me at Wednesday, February 2nd, 7 p.m. Eastern time. If you just go to the show notes, jessicamorehouse.com/312, I will include a link to sign up for this free webinar. Also, it'll be a webinar and then also a Q&A, so you can ask me whatever the heck you want at the end. Let's see, what else do I got? A reminder too, if you do want to get your kind of money situation together, I've got a lot of great free resources on my free resource center. If you go to jessicamorehouse.com/resources, you can sign up and get all of the freebies all in one nice place. Also, specifically, if you want to start investing in a passive way, you know how I talk about passive investing, index investing, all the time. Well, do I have a course for you? It is called Wealth Building Blueprint for Canadians. It's almost at its 1-year anniversary of launching, which is really cool. There's getting close to 250 students in there. It is by application only, so not everyone gets into the course. So you have to be approved by me and also have a one-on-one call with me to see if you're a good fit for the course. But it is focused on you learning the fundamentals and the building blocks of investing, and then how to build your own investment plan with that information, and then how to actually invest using a robo-advisor or being a DIY investor and building your own portfolio and managing it on your own. It is a very comprehensive course. If you go to jessicamorehouse.com/WBB, or again, there is a link on the homepage of my website. There's also a link in the show notes, so that'll make it easy for you too. You can find more information, like kind of the breakdown, curriculum of the course, but also read a bunch of testimonials from students and to get a kind of good idea of if this is the course for you. Anyways, we got that. I'm just looking at my little list of things that I want to make sure that I hit. it. I think those are kind of the main things for now. But of course, as always, there's always some exciting things just around the corner. So, stick around, come back here next Wednesday for another episode. I actually have a really good episode for you next week that you're going to love, and another book to give away. So have a good rest of your week. Thanks for listening. A big shout out to my wonderful podcast editor, Matt Rideout. And I'll see you back here next Wednesday. Have a good rest of your week. I already said that, but I really mean it. I really mean it. And I'll see you back here next Wednesday.